Okay, what's going on, tycoons? Very excited to bring you an update video on Near Protocol, ticker symbol NEAR. This actually was a viewer request, so if you want to see your token in the next video, just comment down below. I'll be happy to make a video on it as soon as I can. So smash the like button and subscribe to the channel if you guys are new as well. I'm dropping content like this anywhere from 5 to 15 times a week, just depending on my schedule, right? So today's video, we're going to learn how to use the fib retracement tool. That's going to be this tool over here, and why we look at the 61.8, the 50%, and the 38.2 level. Those are the three most common retracement levels, and we'll do a quick lesson on it real quick, just so you can understand. So we'll actually just go from right here. And what it does is it helps you identify trends. Okay, nothing is going to move in a straight line up, right? And nothing is going to move in a straight line down. What's going to happen is it's going to retrace, right? And that's what this part is. It retraces back to the upside and then continues the trend down, or you go up, you retrace, and you continue the trend up, right? So what you're doing is you're connecting your swing high to your swing low, right? So you're drawing the tool, you're connecting the lines down to here, and then it gives you these three price targets. Okay, you can use these to figure out if we're in a reversal or a downtrend continuation, right? So if you see right here, we actually have a downtrend, we retrace, and because we got rejected at our 61.8% level and broke through the 38.2 level, right? If we would have found support and then broke through the 61.8, that would have been a breakout and we would have had a possible reversal. But instead, we got a downtrend, a retracement, and a continuation, ultimately to where we made new lows, right? And that's what we've been doing. We did have a nice little pattern here known as an inverse head and shoulders, right? So if you take a look, right, we had our left shoulder right here, we had our head, and then we had our right shoulder, okay? And ultimately we ended up continuing up to the 61.8% level. So you can use these to your benefit, right? Like let's say you're watching this live, right? And you're spotting, basically what's going on. And you see that, okay, hey, well, we just made our left shoulder right here. We just made our our head, right? So we have our left shoulder, we have our head, and now we have a right shoulder. We're like, okay, well, if we get a breakout above here, we may be able to continue to the upside. But where do I need to be very cautious at, right? And it's these three levels, because you know that ultimately, if we don't get past those levels, then we're just going to be in a downtrend retracement and continue the downtrend, right? So that's why these tools are very useful to have at your disposal. And you really need as many weapons as possible when it comes to trading and the battleground and battlefield that is known as cryptocurrency. The more tools you have at your disposal, the better your odds of success are, right? So the next pattern we were really looking at was going to be this falling wedge here. And we're going to see if we were going to get a falling wedge breakout to the upside. So last time we were watching this, I made a video on it. We were looking again at the three main retracement levels, right? So we have our swing high up here, okay? And then we have our downtrend, and we come up, we retrace once again to the 61.8% level. Okay, we come down, we retrace up to here, and then boom, we continue the downtrend, right? So if we would have been able to break out past this level, then we could have gotten our breakout on our falling wedge, right? Which is actually a bullish pattern. But in this case, no strategy works 100% of the time. And, the strategy isn't complete until you actually get the breakout on it. Otherwise, it turns into a new pattern, right? But ultimately, we would have broken out if we would have got a breakthrough of those three retracement levels. But instead of breaking through them, we ended up holding them and continuing the downtrend. So you can actually use the fib tool to get some price targets to the downside as well. So what you would do is you would connect basically your swing high, okay, over here, or your swing low up to the swing high, right? And so that's what we've done in this case. And we have our breakout level here in blue, and then we have some bearish price targets down here to the downside, right? And just to show you guys kind of how it works, if we go over here from the past on the chart, right, you can see, if we use that same strategy, this is exactly where we ended up finding support at, right? So we broke through our breakout level. Okay, we come down, and then look at right here. Okay, if we actually draw this line a little bit more over here to the side, you can see that this 1.5396 has been our main support level that we've been holding and currently bouncing at. So now that we've hit those targets, we have our targets here to the downside. We need to look at our retracement levels up here to the upside. So we're going to do the same thing we've been doing, connect our swing high up here okay, down to this swing low right here. All right. And instead of looking for our breakout and price target levels, we're going to be looking for the retracement levels, right? So we're going to exit out all of these and we're going to put our 618, our 382, and then our zero point 0.5 right here. So now we have all of our levels set up. We know we broke through this pattern here to the downside, so we can get rid of that trend line. And we're going to see what's going to happen with near protocol. There's 3 stages to a reversal. There is your downtrend, right? So let me actually draw this for you guys, right? So here's your downtrend, and then you get box consolidation, right? So that's what we're in right now. We're in our consolidation phase. And if we do get a breakout, an attempted reversal, it would look something like this. Now, we know that these 3 levels are going to be the 3 main levels that can possibly keep us from getting the full reversal back up here. If we end up getting rejected at the 61.8, the 50%, or the 38.2, most likely we're going to do something like this, retrace, come back down and retest our breakout level at 1.428. And if we break through that level, ultimately we might head back down to the low of 0.08807. All right. Now, I do think that we could be due for a bounce here, right? But we really are range bound. We're stuck in this range right now. And until we start trading above the range, that's when we have the possibility of coming up to test our retracement levels and ultimately look for something like this, okay, where we're able to break through the levels versus a downtrend continuation, all right? Now, one thing to be cautious of in this range area would be a term known as a look above and fail, right? So that would be where we break out, okay, and then ultimately we come back down into the range. That's what's known as a look above and fail, and you could see it poke out and then come back in. That would be, kind of a bearish signal right there, and most likely you would head back down to the bottom of the range to retest this 1.4281 low. Now, there is another strategy that I want to teach you guys real quick. If you've made it this far in the video and you're enjoying the content, make sure to smash the like button and subscribe. And it's going to be a term known as bearish divergence. And so I've actually been breaking down the whole entire chart of REEF, okay, refinance, and or I'm sorry, near protocol. Sorry, I just did a video on reef, but one thing I didn't highlight in the specifics of this video yet was divergences. Okay, so a divergence occurs when the token price is doing something different than the actual relative strength index down here, right? And so the relative strength index is going to be measuring obviously the relative strength of a token at its given price, and you can use it to actually see possible entry or exit signals. So in this case, right, what we're going to do is we're going to look at how we're range bound again right here. So notice how we're trading in this range, moving flat, kind of moving sideways, right? We did get this look above and fail, and this is a good example of a look above and fail, right? So you're range bound, you look above, you fail, and ultimately you head back down to the bottom of the range, all right? But if we take a look at the relative strength index, right, instead of staying flat, we're actually seeing the relative strength index going down. So again, the token price is doing one thing, it's range bound, it's trading sideways, and the relative strength index is in a downtrend. This would be bearish divergence, and it's an indicator that you get some bearish activity. So now we have a look above and fail, right? Then we get bearish divergence, and most likely that's a signal that we're going to break the bottom of our range and continue heading lower, right? And then look at what we do. We start the downtrend, we retrace, and then we continue to the downside, right? Now we also had a term known as a inverse cup and handle. So I'll go ahead and draw it right here. And basically, you have this rounded move on the top, you get a slight bounce, right? But ultimately you break that line right there. And it's a bearish pattern saying that, hey, once you break this line, you're probably going to head to the downside. Okay. So I just wanted to cover that really quick, that bearish divergence. We'll go over another example of it right over here. And this one is a little bit clearer and a little bit more defined, right? So we're clearly in an uptrend. We're doing what's known as creating a high and then a higher high right over here. So we have a higher high and then we have a high right here and a lower high. So again, the token's doing one thing, the relative strength index is doing another thing, and it's a good indicator you may see some bearish activity. If we measure out that move from the highs to the lows, right, that was a 50% drop. Ultimately, it ended up dropping about 64% before we formed a bullish pattern known as the falling wedge, and we were able to get a breakout retest, and then boom, we went up to the top. Okay, so actually, this is a really good example of the trend continuation, but instead of being bearish, right, this is actually a bullish one, a bullish retracement level, right? So we have our swing low up to our recent swing high up here. We see we get the breakout outside of our falling wedge. We come down, we hold the 50% retracement level, and then ultimately we create new highs. And that's a bunch of stuff you can use. Okay. So I know it may seem complicated, but really, we're really just using two things. Okay. You don't have to be an expert at drawing chart patterns and being able to spot them. It is much simpler, right, to just use the fib tool. Okay. Connect some swing highs to some swing lows, connect some swing lows to some swing highs, and it's going to give you three really important levels that you can use to your advantage. And take a look at the relative strength index, right? If you see the token going up and the relative strength index, in a downtrend, that could be some bearish divergence. If you see the token in a downtrend creating lower lows and you see the relative strength index creating some higher lows, that could be a bullish divergence and an indicator of some bullish activity. So appreciate you watching the video. Smash the like button, subscribe to the channel. Don't forget about those viewer requests that I do every week. And yeah, if you made it this far, I think you'll actually enjoy one of these next two videos.